Thank you very much, Marina. It's always a pleasure to be here. So, good morning, ladies and gents. Great to be back at IDEEA. Great to be back here in Prague as well. And for the next 20 minutes or so, if my slides will appear, please. Just a second. This is always awkward, isn't it? But here we are, hopefully. There we go. Okay, right. So, next 20 minutes or so, we're going to talk about the numbers. And this is going to be my agenda. So we're going to have a quick look at where we've been. Nothing too groundbreaking there for any of you. Then we'll look at the global picture, Europe, and then we're going to drill down and look at CEE, of course, in more detail. Before we have a quick look at Prague, I thought it would be rude not to, seeing as we're here, before we finish with a glimpse into the future and our pipeline. So, where have we been? Now, at STR, we have been tracking performance data now for 38 years. And undoubtedly, the last 4 have been the most remarkable, of course. In 2020, we all know what happened. The world stopped traveling. But we were confident that our industry would be resilient. And we kept saying everything will be okay in the end. And if it's not okay, it's not the end. And that's certainly how things turned out to be. Because a year later, we started to see travel rebounding. It was predominantly driven, of course, by leisure demand. Regional destinations, focus on well-being really helped things out. And then a year later, everybody wanted to get back out there. They had been locked up essentially for 2 years, so they splurged a lot of spend on luxury demand, luxury travel. And then this year, which is really important and really important for this region as well, is we've got back to business. We've got back to meetings, conferences and events, and there's a new normal that is materializing as a result. So that's of course where we have been, but how does that then lead into the global situation? So this first chart that I want to show you, this is occupancy recovery indexed on 2019 for COVID and then 2007 for the global financial crisis. And of course the dip for COVID was far greater and then the subsequent recovery far steeper. But as we look now, we're 4 years after both events and we're practically in exactly the same point as we were post the global financial crisis. As a global industry, we're about 4 percentage points behind where we were prior to the pandemic. And one of the reasons for that slower return, I would say, is airline capacity. It's already been mentioned a couple of times today, but using some data from our friends at OAG, what we can see here is the good news is that airline seat capacity should be pretty much back to where it was in 2019, around about this time. So that's obviously a positive because we need those airlines to fly our guests to our hotels. But of course we live in a big world, so how are the various regions doing? This is year to date for July occupancy with the percentage change based on 2019. And there are some regional differences. So we can see there, Central America, the Middle East, fully recovered, but most markets are still a little bit behind where they were in 2019. In North America and in Europe, we're about 4 percentage points behind where we were. But we're still missing a big demand driver, and that is the Chinese. So prior to COVID, Chinese outbound visitors, about 350 million overnights per annum. It's very significant. We expect that to be back at that level, surpassing that level in 2025. You'll see a big leap next year and another big leap the year after. But one of the challenges for those potential Chinese outbound tourists has been visa processing times. But we do believe that those are getting better, they're getting shorter, so hopefully for all your potential guests, when they go to the visa office, they will be greeted as such. But what about rate? Now, a lot has already been said and talked about rate. Of course, we know it has grown significantly since we have started this recovery period. And this is that same recovery index versus the global financial crisis. Of course, again, a far deeper decline and a sharper response. But our rates have recovered fully. They're way above where they were, and you can see we're about 2 years ahead of the recovery that we saw during the global financial crisis. So looking forward on a global level, this is just the aggregation of European, Asia Pacific and Emirati markets and this is demand indexed on 2019. So all those Chinese travelers that I mentioned, they're going to go to Asia Pacific first of all. So we actually expect Asia Pacific demand indexed on 2019 to outpace European demand indexed on 2019. But fear not, because we will still be selling more rooms across Europe than we were in 2019. So that's a nice segue, I think, to move and have a look a little bit closer to home and look at Europe in a bit more detail. And this first slide, I think, is one that you'll all be pretty familiar with, and the story you'll be pretty familiar with. So occupancy, like I said previously, nearly there, but not quite back. Average rates significantly ahead across the board, and RevPAR being driven by that rate growth is also up. And over the last 12-month period, we've averaged a RevPAR index of 117. So we're way ahead of where we were in 2019. As I said, that's being driven by rate, occupancy not quite there. And we're looking back to 2019 a lot, and I'm doing so in this presentation, but what about year on year? And this is where, again, we're starting to enter this new normal as such. So on the surface, this is a very positive chart, of course. You can see occupancy growth, average rate growth, RevPAR in double digits. Year on year, fantastic to see across Europe. But that's not really the story. The story is what's happened in the last few months. Look at how it's tailed off. Tailed off, tailed off, tailed off. Now, we're still enjoying the growth, but we're not going to be enjoying that double-digit growth that we've gotten used to, because we are effectively recovered for more than a 12-month period. So expect the increases that we see and we're talking about in the coming months and years ahead to be more historical norms, those normal single-digit increases. This is the normalization of our industry, which, if you think about what we've been through, is not a bad thing. And if we look at some of the key cities across Europe, this is year-to-date indexed on 2019 occupancy. You can see most markets 85, 90% recovered plus. It does get a little bit weaker the further east we go, admittedly, but we've got some winners as well there. You can see Edinburgh, Rome, in this region, Vilnius, Warsaw, back up above 2019 levels from an occupancy perspective. Rate, as I mentioned, it's a completely different scenario. It's a sea of green. We've got some really strong double-digit growth there, markets as diverse as Athens and Paris and Budapest in this region and many others as well. Average rates well and truly back. But now that we're entering this new normal, where is the growth going to come from? And what we've done here is we've drilled down and looked at day of the week. So we've got shoulder nights, Sunday and Thursday, all those bleisure nights, if you'll pardon the phrase, weekday, Monday through Wednesday, and then the weekends. And the good news for Europe at the moment, anyways, we're just about holding on to growth across all nights of the week. In the US, we've actually seen some declines on the weekends as that leisure demand has started to soften a little bit more. But where the biggest growth is coming from year on year in the last few months is during the weekdays, which is a real good thing, I think, for our industry, because it indicates the return of corporate demand. We all know leisure came back far more quickly, but corporates are getting back out there and they're traveling more. So that's a real positive for us to take hold of. Another opportunity, which has not yet really materialized properly, but very important for this region, is group demand. So this is group demand indexed on 2019, and you can see we're still about 45% behind where we were before the pandemic. Transient back, double digits ahead, way ahead. But groups is still lacking. Now it is growing. Year on year it is growing, but it's coming back slowly. And I do emphasize the word slowly. But this is another opportunity for our industry. And as we look to the future, and we look at Europe again, some key markets here. We've got business on the books for the next 90 days compared to last year. So again, this is a real positive. There are a couple of exceptions, but for the most part, we've got more business on the books for the next 90 days this year than we had last year. And that does, again, indicate the return of the corporate traveller as we move into the all-important Q4. So that's where we are on a European basis. But now let's drill down and really look at the essence of this conference, of course, Central and Eastern Europe. And the first slide I'm going to show you is an aggregation of the cities that you're going to see on subsequent slides. And what we've got here is occupancy. So we've got our 2019 line here. Then we add in 2022. So it's lower down, as you'd expect. We know we're not quite back there. And then 23, somewhere in the middle, right? So again, growth year on year, but not quite back. And that, as I've mentioned before, is the occupancy story. But if we start to drill down now and have a look at some of the key cities, this is July year-to-date occupancy indexed on 2019. And we've got some winners. They're Podgorica, Brno, Vilnius, Warsaw as well. Let's touch on Warsaw for a minute. So that market's recovered really very, very strongly. But why has it recovered so strongly? Well, it's a bit of a sensitive topic, but in reality, it's the Ukraine effect. We've seen demand from military, from media. We've seen demand from diplomats. We've seen corporates relocating from Kiev to Warsaw. We've seen high net worth Ukrainian individuals living in hotels in Warsaw. Pretty much as soon as the invasion took place, we saw Warsaw's hotel market recover very, very quickly. Elsewhere, though, we can see it's a pretty consistent picture when you look across wider Europe, even wider across the world, 85 to 90% plus recovered for most of those markets. That's versus 19. What about versus 2022? And again, it's overwhelmingly positive. You've got some really strong double-digit growth. And I think one of the things that's really nice to see is this part of the region, Prague, Budapest, Vienna, Bratislava, coming back significantly. We're having more airlift coming into these markets. We're seeing the return slowly of groups. We're seeing the return of corporates. We're seeing more American travelers. This hotel is certainly full of them, or it was at breakfast anyway. We've got a lot of Chinese travelers starting to slowly return. So that's a real positive for this part of the region. And then if we look at actual levels of occupancy, well, it's no surprise to see Warsaw is ahead, 71%. But then you can see other big cities near the top of our leaderboard as such, Athens, Vienna, Prague. Note as well Tri-City, northern Poland on the Baltic coast, a mixture of both leisure and corporate demand doing well. But there are some softer markets out there, Kiev for obvious reasons, but then Sofia and Skopje south of 50% year to date. So a little bit of growth certainly left for those markets, but as that corporate demand returns, hopefully it won't be too far behind. What about average rates? So this is a pattern, again, you're not going to be surprised to see. So we've got our 2019 line in there, then we add in 2022, and the interesting thing is actually this region recovered rate a little bit later. It wasn't really till the second half of last year we really started to see year on year or growth from 2019 levels. But look at 23, you've got some clear blue sky between the last couple of years. That's that strong rate growth. And if we look average rate indexed on 2019, you can see, well, it's a sea of green, isn't it? You've got some really strong numbers there, particularly in markets Athens, Podgorica, Belgrade, Budapest, Warsaw, so on and so forth. The only city letting the side down slightly, Tallinn, and we're putting that down really to the lack of Russian visitors at the moment to the Estonian capital. If we look at year-on-year percentage change, again, double digits across the board, really very, very healthy growth continues. And where we're not seeing such big numbers, lower single digits, that's really the normalization of the industry once more. If we look at actual average rates even, there you can see Athens, €200, very strong in the Greek capital. Then Vienna, 126 euros, Budapest, 118. But there are still some cheaper markets out there. Most markets hovering around the €100 mark, but Vilnius, Brno, less than 80 euros average rate. And if you really want to bargain, head to Sibiu in Romania, 59 euros average rate in that city. So if we add that all together, what does that mean for RevPAR and RevPAR recovery indexed on 2019? So the good news is we've got lots of light green. So lots of markets fully back, fully recovered. And again, you can see some really strong numbers there in markets such as Athens, Warsaw, Belgrade, and so forth. There are a few which are still lagging behind, and one of them is Prague. So July year to date, Prague was lagging behind slightly, but that's due to air capacity, as we mentioned, the returning demand segments. But the good news I can bring you, hot off the press, released just yesterday, is our August numbers. Prague is now ahead year to date of 2019. So it had a really good August, driven, of course, by leisure demand due to the seasonality. But we'll see shortly more demand coming into Prague. It's doing a lot better than it was. And then something else I want to touch upon, and it stems from that number in Budapest, really. And this is something that is really important, and it's VAT in this region. And we've seen 3 governments lower VAT on hotel stays since the pandemic started. Now, we all know what politicians are like, right? When they're out on the campaign trail, they want to put a high-vis jacket on and a hard hat, and they want to be in a factory or on a building site. But you never see them checking anybody in at reception or working in housekeeping or in room service. And they really should, because our industry contributes 10% of global GDP. If there's one thing that COVID potentially did that was beneficial, was it brought our industry a little bit more to the fore. And it's really good to see 3 governments recognizing that they will help to stimulate demand if they lower taxation on hotel stays. So that, I thought, was a really positive thing to bring you. And something else that stimulates demand for this industry is events. So I've taken the big 3 cities here, Prague, Budapest and Warsaw, and looked at rolling 7 average rates. And you can see just how impactful events are on these 3 cities. So whether it's sporting events in Budapest, or medical congresses here in Prague, or Beyonce in Warsaw, it's driving rates strongly. And if you look at business on the books next year in Warsaw for Taylor Swift, well, it's going to sell out that city, certainly. And if we stick with business on the books, you can see, again, pretty much without exception, we've got stronger business on the books for the next 90 days this year than we did last year. It's pointing to those demand drivers returning, pointing to corporate demand returning. We should be in for a relatively strong end to the year. Now, I thought it'd be rude to come to this amazing city and not focus on Prague. Just a few slides. I've talked about it already. We generally know what's happening. So you can see here, each month, slightly behind from an occupancy perspective. We all know why. We've gone into that. Rates about 10% ahead. But what's interesting is when we start to drill down to day of week here in Prague. And Prague is quite fortunate in many ways. It has a plethora of demand drivers, leisure, corporate, so on and so forth. But look at how occupancy has recovered when indexed to 2019. It's a 2-tier recovery thus far. Weekends have done far better. That leisure demand has come back far more quickly. In the midweek, the corporates are still lagging behind a little bit. So hopefully we're going to see that shift in the not too distant. And the same applies for average rates. Of course, weekend leisure travelers always been more cost conscious, but the demand has been there and hoteliers have been able to drive rate accordingly. Business on the books for Prague, I think this is a really important slide. The first thing is it's ahead of where it was last year. Really good news. But if you look at that chart in the top right-hand corner of the slide, you can see the biggest growth is coming during the week. So that's pointing to that returning corporate demand. And as I mentioned, August year to date, back up above 19 levels. This is our forecast for RevPAR indexed on 2019. It will finish above in Prague this year, and then you can see a steady, nice steady, more historical norms as we move forward across this city. Now, I've just got less than a minute, so I'm going to finish off by touching very quickly on the pipeline. And when we look at the pipeline, these are the top countries, number of keys in the active pipeline. And you can see it's really a story about Poland, 18,500 keys. Then we've got Georgia on 8,500 keys and Greece just under 6,000 keys. So if we look across the board, there are going to be some pockets of Poland which may struggle to absorb all of that supply quickly. Georgia as well, it's grown significantly over recent years, but expect to see far more coming in. And then really it's those smaller markets like Uzbekistan, Albania, Montenegro that are going to have to absorb quite a lot of new supply. The other markets, not too concerning, not significant when you look at the total supply picture at present. If we look at the cities though, these are the cities with the biggest pipelines in the region. You can see those big 3 there, Warsaw, Budapest and Batumi, which might not have been on everybody's first guess, but significant amounts of new supply coming into that market if all of those projects come to fruition. That's what the 88% represents. But note as well, Poland, 6 Polish cities in the top leaderboard. Also interesting to see leisure. So I mentioned Batumi, obviously it's on the coast, you've got the casinos and so forth, but on the Polish Baltic coast as well. You've got 2 cities there beginning with P and K. I'm not even going to attempt to pronounce them because I'll get it hopelessly wrong, but you can see significant new supply going into those markets. Also Tashkent. We don't talk about Uzbekistan very often, but you've got IHG, Accor, Wyndham, Hilton, Deutsche Hospitality, all opening their doors in Tashkent as well. Here in Prague, well, less than 1,000 keys in the pipeline shouldn't really be too much of a challenge for existing or future hoteliers. So, to summarise, occupancy nearly there, but not quite back. We've still got opportunities from group, Chinese and corporate demand. Events will continue to be very important. Rates are well ahead of where they were. Pipeline, as always, it's going to be market specific as to how impactful it is. Business on the books looks good. RevPAR is recovered in the vast majority of markets. I think there's plenty of positivity as we move forward for this very dynamic region. And with that, I'll say thank you very much indeed for your time. Thanks.